Sharia-compliant investing is gaining momentum in South Africa as more young professionals discover the benefits of diversified portfolio options available to them. Sharia-compliant investments have to adhere to a set of strict guidelines. Investments in companies involved in gambling in casinos, alcohol, tobacco, hotels and arms and weaponry, amongst others, are not allowed. Now, Suleiman Khan is head of Sharia-compliant investments at Sanlam, joins us from our Cape Town studios to tell us. Suleiman, thanks for your time. So let's talk about this new trend. Why are the young freer and perhaps thinking differently from their older peers?
Well, if you look at the Muslim community and look at what they had to invest in, if you go back to the earlier days and of the days of our forefathers, there was not much that they could invest in except direct property, and you find that over time that has since changed with the introduction of more investment products that comply with Sharia.
Yeah, so let's talk about those major differences then. So the one-size-fits-all approach clearly, not that it has not worked, it wasn't ideal, let's put it that way. So now, in terms of the expanded portfolio of offerings that are open, give us just the range and the spread of these investments.
Okay, if you look at it, basically what we had was the Sharia banking, Islamic banking, and that was just a basic banking product, that you had into the market. Thereafter, in the 1990s, you had the introduction of the collective investment schemes, or unit trusts, as most of us may know them, and that offered a much more variety to the Muslim investor out there. And now finally, we at Sanlam Private Investments has introduced the managed share portfolio, which gives the client a further diversification.
Yeah, so let's talk about just how difficult it must have been to invest in those days then. Would I be correct, and please do correct me if I'm wrong here, to say that older Muslims who invested in markets were robbed of better performance, if you like, that's brought by diversification?
I won't really say that they were robbed from that performance, because they were invested in property, and we all know that property is a good investment.
Steady as she goes.
Sorry?
Steady as she goes, as I said. Property is steady, no volatile movements and that kind of thing.
Yes, exactly. And it's something that they understood better, and it's something that they could ensure that they confirmed in terms of Sharia.
So let's talk about the young generation and the kind of things that they are now doing that you are noticing. So you're noticing that more young professionals are indeed beginning to discover the benefits of diversified portfolios. What are they investing in?
Okay, so what happened now with the introduction of the unit trust? We find that the younger the latest generation, they now have the option of going into a unit trust investment. And if they, if you look at their retirement investments, now they can actually ask their trustees to invest in Sharia funds that are available, whereas previously they did not have that option. And if you look at the retirement option, with retirement monies, you can't go and buy direct property as such. So you had the introduction of the unit trust sector, and you find that retirement funds are now able to invest on behalf of the Muslim professionals into those funds.
Yeah, and so how different is the performance when you compare those that would have ordinarily invested in property and those that are now investing in diversified portfolios?
Well, you don't really look at it that way. I think you look at it more as a diversification. So property will always have good returns and at certain times, and then unit trust will have good returns at certain times, at different times. So it's not an idea. It's not a selection of whether unit trust is better than property. It's actually a combination of the both here.
Yeah. What about the momentum that you are talking about? So you're saying you're noticing younger people are beginning to come in more and more, and you notice that the numbers are growing. Give us a sense of the numbers that we're talking about.
Well, if you look at the retirement industry, I mean, it's grown quite big. I'm not going to be able to give you the numbers offhand, but the growth trends have certainly improved. with more people investing their retirement funds in Shariah funds, when people retire, they also invest their monies in Shariah investments. So we've seen that growth, improve quite a bit.
Yeah. And how widespread is it? Because the sense I'm trying to get is whether there's been a leap of faith with the coming of the collective investment schemes.
Yes, there has been. Because if you remember, or if you think about it, not everyone could invest in property, and a person that's employed can't, he can't just buy direct property with the cost involved there. So if he has a little money, he can rather buy the share or the unit trust.
Okay, let's talk about the more sort of technical things that one needs to consider if they are a Muslim and they are investing in the shares of companies. Just talk to us about what sort of issues you look at. Do you look at it in the traditional sense of evaluating an investment, your cost to income ratios and those kind of things, or is there a different set of guidelines that's required here?
Okay, our investment philosophy is to invest in good quality companies that have sound management and deliver good performances, but at the same time that comply with Shariah. Now, in terms of Shariah, we're quite restricted in terms that there's certain ratios that we would assess on the company to ensure that they're Shariah compliant. Example, the debt to equity ratio must not be more than 70 to 30.
Right.
So, we've got a Shariah board in place, and we assess those ratios and we get approval from the board as such.
Yeah, that sounds quite onerous. Is it difficult to make an investment, or is this an easy, seamless process?
It's actually quite seamless to invest, but there is amount of work that goes on behind the scenes where you actually analyze the company's financial statements and look to ensure that they meet all those ratios.
Yeah, but what about these other requirements, or the requirements that you're talking about now that we've just spoken about? Does that not introduce extra costs into the product and end up perhaps costing, say, a Muslim more compared to somebody else, say, who is investing in a different product that does not have the demands that Sharia law requires?
Not really, because the actual analysis of the balance sheets and the ratios, you'd just have your analyst that would do that job, and then it will go to the board for approval.
But would you be able to compare the costs that you sort of have to deal with from that perspective versus the others that are outside of Sharia law compliance?
Well, actually, our products attract the same cost as a non-Sharia product. So, for example, in the SPI portfolio, the cost for investing in the Sharia portfolio is exactly the same as the cost of investing in a non-Sharia portfolio.
Yeah.
In terms of compliance, yes, we do have a Sharia supervisory board which we employ, and that's the extra cost that's involved there. But that's a compliance cost, and it forms part of your compliance. It's not passed on to the actual client as such. The client doesn't pay any extra for it.
Right. I notice here you talk about the fact that apart from the annual management fee, there are no upfront and there are no also performance-based or exit fees. Does that differ from the other types of products in the same category?
Yes, if you look at the unit trusts, do tend to charge you an upfront fee. Some of them waive them, but most of them do. They also charge you a performance-based fee, and your ongoing fee is, it is a little bit more expensive than the direct share option as such.
Yeah. So let's talk about the future of Sharia-compliant investments. Is there a school of thought that says this needs to be looked at from time to time? So, for instance, perhaps you've got other types of investments coming in and other types of investments being withdrawn. And at what level is that decision made?
Well, we got to actually look for the need for the product. So we'd introduce more products if there is a need for it, and if it is able to comply with Sharia.
Yeah.
But right now, what we do find is that the retirement industry, that's where most of the flows start coming in.
Right. But people always change, and the world is changing. I mean, if you had said 10 years ago that maybe not 10 years ago is not a good example, but if you said 20 years ago a technology company would be the most valuable company in the world, people wouldn't have realized it.
Yes.
I'm trying to understand from a Sharia perspective when you begin to look at those kind of differences and make a decision whether an investment such as that is allowed or not.
Well, if you look at the companies that we invest in, we look at those companies just like how you'd look at any non-Sharia company. For example, if you're investing in SA breweries, the decisions that you make regarding that particular share and as to when you should acquire it or when you should dispose of it, you look at it in the exact same way on the Sharia space, except that you're looking at a different class of shares that do comply with Sharia.
Right. And also, what about in terms of regulation? We do know that the authorities from time to time come and change the regulations. For instance, we know that there are a number of initiatives to try and reform the pension fund industry. How do those impact products that are linked to Sharia law and those that need to comply with Sharia law?
We do have to comply with the regulations in terms of, in terms of regulations that do come out from time to time. For example, in the retirement industry, you've got to comply with Regulation 28. So the Sharia investments also have to comply with Regulation 28.